The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Everyone, Basil Chapman. My pleasure to be here on this Friday, the 4th of May. This is going to be a very important session because of that V-shaped potential recovery from yesterday's low. When we're looking at the different chart formations, that V is very important because you want speed on the downside, but you want an equal velocity on the upside. And then you want to not just have the velocity, in other words, the torque, you want to have the momentum, but you aren't going to get momentum unless you can see the stochastic rally sharply back over into the 25% area, not just in the 19% area where it is in the daily chart of the Dow. You want to see that accelerate higher, and then you've got to give it a little bit because momentum only builds up after you've built up torque, after you've got that initial thrust to build some kind of force away from where you were. And if that's the case, then we're looking at the 26,563 level, the 9-period exponential moving average. That's going to be that whole area between 26,563 and 26,640 with the pink 9-period moving averages and the black 14-period moving averages. That's going to be important because if it can hold a little while longer, you haven't even seen, you've just begun, maybe today, a turnaround in the histogram, that is the distance between the 9-period differential, the green line. Remember, this is Technical Friday, the ChapmanWave methodology. So the green 9-period differential, you want to see the distance between the red and the green start to narrow. You see the way it was widening here when we got the sell signal on the 16th of July in the Dow, 27,398, 27,391 was the sell signal where we started the short, and then it came all the way down. Then you see the way it turned up. It was very unsteady, even though the low was 25,339, August the 15th, exactly a month later. It took a little while with those H patterns that had become M patterns, and they moved up. And before that, crossover positive in the 9-period differential, the green over the slow-moving average, the red, the 26-period moving average. A lot happened. So you had to get that whole build-up. And then on the way down, you remember we were talking about this. Let me just do this right now one more time. Look at this. You had 14 sessions from the high that was made, that peak D high, back on the, I should remember the date, for goodness sake, 9/12. So on the 12th of September at 27,306. This last pullback took a long time before, on the 14th session, you got a crossover to negative between the 9-period and the 14-period. Now you've got a rally attempt, just gone back into the gap of 3 days ago. Now look what happened here. It was 13 sessions before you got the confirmation crossover. That was the back in the sell signal of July, the 16th. And then it took right up until, yeah, it really took until about the 2nd of August before you got the crossover. And then there was a pullback and a sharp move up to the 9 and 14-period moving averages. And then, boom, we went on the way down before you got that low. So what I'm saying here is that to be able to build enough momentum to get that MACD to at least start to turn higher, it doesn't have to cross positive, but at least turn higher in the 9-period moving average, you'd probably have to see the shrinkage of this 9-period and 14-period moving average in the daily chart so that the distance becomes narrower. You'd actually want to see it cross positive. I don't know if that's going to happen in this move. I don't think so. Before you really get, I'd call it a rally rather than a bounce. Okay, I think next week, I thought it would either be early next week or right away we start to see a rally. If it happened now, then it would be a shorter-term rally. If it happened next week after lower lows, it would be a much more determined, bigger, larger arch formation. All right, got that out the way. It's absolutely imperative with the candle that was formed yesterday. If at any point in the next 3 sessions, the Dow starts to trade underneath 25,970 for more than 2 or 3 hours, there's a good chance we're going down towards the 25,743 level. Let's just quickly look at the Vix Index, because that is imperative. I had said earlier, I had sent both to the Den, to the Tiger Den, and to subscribers. I had said, let me see, and then we go back and see exactly what it was. ChapmanWave, I was looking at the E-mini. So let's see, so now the VIX is at 17.78. I was looking at the ESZ19, and what I'd said was that if that was trading at 29.01, and what I'd said is cascaded sharply below the daily orange 200 EMA at 28.97 Thursday, then closed over it. If after 8:30 a.m. Eastern Time, jobs number, it spikes above 29.22, it would suggest a near-term bounce to the 29.37s is possible before arching over again. VIX over 20.50, the ES cascades. Under 18.30, it rallies. What did I say it was right now? It is at 17.80, I think. So a slump below 28.92s continues the correction into midweek before a strong oversold bounce is likely. See you at noon. Okay, this is noon, and here I am. So far, 28.37. What is the high so far? Sorry, 29.37. The high is 29.38.50. And now let's go to the E-mini. And you can see the 2-minute chart. I put a down arrow after a peak F in the 2-minute chart. The MACD crossed the negative stochastic, failed to confirm the rally. But what's really important is it is still holding very nicely above the 14-period moving average. So nothing to see here, folks. This is one of those things, a sideways move. I want to show you something fantastic. I hope I've still got it here. So this is a peak E in the 10-minute chart of the E-mini. There's your M formation in the MACD. So if it starts to decline and it crosses negative by going under the red line, that will see the E-mini probably go from 2937 right now to the 2933 level. If it goes under that, that's the 9-period moving average, green moving average support. If it goes under that, 2930 will be the next support. However, if it breaks to the upside now, there could be a restart over here in the 2-minute chart, because it has not crossed negative. And that's very important. I wanted to show you something. My expression is that rectangle formations can last a lot longer than your patience. Have a look at this. This is from, wow. This is from the low that was made at 1 o'clock on the 2nd of October. It starts to rally, and then it has a bounce, and that bounce goes to a very quick peak D in the 10-minute chart. Then it pulls back, and it creates a rectangle formation. That rectangle formation went right to the 10 o'clock news report yesterday. You remember I was on with Tommy Jr., and we were talking about how steeply and quickly the E-mini had fallen. But look, it went right up until 10 o'clock. Isn't that incredible? I mean, a narrow range. Look at that narrow range. It refused. It went to another D, and then another trough D, and then it went back up again. So then it broke down, and now we've been in since the low of yesterday, round number. Oops, no. Yes, 28.55, round number. Didn't I type that in nice and bold? Oh, I typed it in the 2-minute chart. 28.55 round number. It's run up all the way, and now it has made a high today of 29.38. 29.38 from 28.55. Wow, 78 points. That's a pretty big move. I'll be right back. Dow's up 224. Basil Chapman.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks. So let's just have a look at that chart. Remember, this is a process. It's not like the magic fleece or whatever it is. So here we are in the 2-minute E-mini. It did plunge just as I was talking about it. It plunged, and yet it's still technically holding well, even though the MACD. So at any moment, if we see it cross the 2 moving averages cross negative, that's where you've got to be. So it's not a timing tool, it's a confirmation tool using these moving averages, but the timing tool comes with the ChapmanWave methodology. So we'll see if this is used time and not price. Remember, there are 2 ways of looking at the market. You can consolidate both on the way up and the way down by using time, or you can use price. And then, of course, you can get a combination. And look, you've got your peak E right here. It's confirmed there's a peak E. MACD hasn't crossed negative. Stochastic's still strong at 90%. And the price has pulled back. Red candle, but it's a 10-minute chart. Anything can happen at any point. It takes just seconds to go green again. So let's just watch this. We'll be back. Okay. So here we go. I just wanted to do something. I had a question yesterday late. I got it, but I wasn't able to respond about Snap. Hector, I think it was, they wanted to look at Snap. Snap is trading at 14.57 at the time. If I looked at it, I would have said, just wait. There might be a little bit of a pop-up, but everything about the daily and the weekly chart is suggesting that a consolidation is unfolding. I've got a sell mode in the daily. I've got a sell signal, which by the end of the day today could become a sell mode in the weekly. Everything about it says absolutely it's a sell mode, but it's a weekly chart. I need to wait till the end of the day. So I'm just saying sell. I like the fact that it's popped with the market today. I don't like the action off the top. On a shorter-term basis, the monthly chart is still holding very nicely. How about we look at it again early next week to tell you to get in right here at 1457 with a 13.90 stop. That's just one way to start, just like a tiny position. I am actually going to say, because I think lower lows and lower highs seems to be the theme, I'm going to say on Snap Inc. trading at 14.57, down, no, sorry, up 0.28. It was all the way to 15.17 and it's given back a chunk at this particular point. It's a start of trying to attempt to make some kind of support, but that 1338 200-period exponential moving average is really what you need to watch very closely. Okay, here we go. We did the Dow. Now let's go to the S&P SPX.X. There we go. S&P, very nice bounce. See the stochastic's gone from under 20% to 21.04. That's a start. The histogram here is actually improving just a tad better than the daily, but it's still not good enough. That weekly chart, the MACD deflected low. I'm going to put this in right here as a rectangle. You see right here. So far, it's deflecting lower. That's different to crossing negative. When it deflects, it means that it's very close. It just didn't manage to hold above, or in this case, coming from below, trying to go above, and now it's back below. So that's the green line, the faster moving average, and it's under 80% to 78%. Let's see where it closes, because the 14-period moving average in the weekly chart is going to be really important. It's at 29.43. We're trading at 29.37. Let's see what the day holds. If by the end of the day there's some kind of a pullback, it closes in the 29.35 or lower area, that's going to tell me to monitor this as an H pattern within a rectangle. And that says the absolute imperative support line that was held yesterday exactly says if, in fact, any day next week, the S&P cash is trading at under 29.11, there's a real good chance you're going to retest or get close to the low of yesterday, 28.55. Next thing is on the upside, a good close today suggests that 29.44, 29.52, 9 and 14 period moving averages will be the next resistance. QQQ, the NDX 100 trading vehicle, right up against the resistance. The stochastic is at 24%, a little bit better, and the MACD has actually turned up, but it hasn't crossed positive. Only the faster moving average has turned up, and the weekly chart is right in the middle. It's really not a pretty sight. The MACD's deflected low in the weekly chart. The stochastic's not good at 68%. It's quite weak. I suggest to you there's going to be further consolidation, downside movement in the S&P over the coming into next week. Let's look at the QQQ NDX 100. I just looked at the NDX 100. Let's look at the IWM. IWM is much weaker. The weekly chart says there's a good chance that at 145 key support, if there's a close under 143, the 142.44 becomes a leg D to the downside, and the 200-period moving average in the weekly chart is going to be imperative to hold. If that gets taken out, the small caps are in real trouble. I want you to go to gold just for a moment to tell you that as far as the weekly chart is concerned, it's done everything that we've been talking about. I said gold should at some point test the 14-period moving average. It's had a fantastic move. Now it's consolidating. It's still in the consolidation, holding really well at 15.11. It's just down 2. It was down a little bit more today. It was down at 15.01. Now it's up 10 points from the low at 15.11 for a Friday. That's pretty good. I like the way that it's holding, but the GDX, which is really the proof of the pudding, that's the one that I'm watching closely. It's been under the 14-period weekly moving average twice now in the last 4 weeks. Is closing above that now. I think it's in a consolidation, and a very good consolidation. I said the 26s is the big test. That's for me what I'm anticipating. It's been to the 26s. It's in the 27.69 area. I would not be surprised if over a period of 10 sessions, 10 trading sessions, that's 2 weeks, that we get a test in the low 28s, but that somehow or other the 26s is tested. The 26 level at $26.10, $26, somewhere there is going to be tested. If you're looking at silver, the silver chart is not as, it's not bad. It's just not quite as positive as the weekly, especially as the GD, as the gold chart. But the price is sitting right on the 200-period moving average in the weekly chart. I'm just going to suggest to you that these are consolidating. They're doing very well. And unless silver starts to trade in the 16.63 or lower area, if it does that, that's a real problem, because then it's going to be doing quite a bit more testing of support. And let me just go to the dollar for the moment. I'm going to look at the dollar. Dollar is holding well after that big move to 99.46 into the ChapmanWave. This is the resistance. See this? Cup formation was a double cup formation with another cup formation, almost equal in time. Stalls from the 98.68 high of the 1st of August to the 99.37 high of the 3rd of September. A month later, it goes to that is on the 1st of October every month. 99.46, another cup formation. Now it's building another one. If there's a smaller, shallower, quicker move from not breaking under 98.50, but instead going to 99.27, I think we're going to retest the most important multi-year recovery high. And the weekly chart is still holding very nicely. It is in a leg D. I've got to be careful with that because leg D in the Chapman wave says from a peak D, that means a lower high bar, other things can happen. And it's leg D in the monthly chart. As we're about to go to our break here, USD JPY trading steady at 108.68. No, I'm sorry, 106.87. Reverse those figures. Underneath 160.30 is a problem, so far this is good. I'll be right back. Now it's up 237.
Since 1984, Basil Chapman has been using the ChapmanWave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the ChapmanWave sequence. Using the ChapmanWave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. David White has had some great trades in his daily trading newsletter, The Path of Least Resistance, and now's a great time to sign up while saving 25%. Just use promo code OPTIONS at checkout and you can save 25% off your first month. And this offer still comes with a 30-day money-back guarantee, so you have nothing to risk. Dave has had some great options and equity winners over the last couple of months. If you'd like to see for yourself the types of option trades he recommends for his subscribers, then check out all the details on the front page of TFNN.com. This offer only runs for 1 week and ends this Sunday, October 6th, so don't miss out. Head on over to the front page of TFNN.com right now for all the details and to start your 30-day money-back guarantee subscription to the Path of Least Resistance today. Remember to use promo code OPTIONS at checkout. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We'll look at the euro in a moment, but let me just show you. This is the 2-minute chart. Remember I said you can go sideways for quite a while. That's the rule of the rectangle formation. Look at this, rectangle formation. Let me just show you. And up until this very second, the E-mini has not, 2 minutes has not turned negative, even though we've used 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, maybe 22 minutes, 23 minutes since the F was started. That's 22 bars, that is. 22 minutes, 20, no, that has to be, that's correct. So, so 22 bars of 2-minute charts Should be 44. That doesn't make sense. That's because we started before noon. Yes. So we've been in this consolidation now for quite a while. The MACD has turned down, stochastic weight 67, and yet the price hasn't turned, but it could at any second give you a little hint. But now it has to break the low that was made right here. It has to close for 2 bars out of 3 underneath the low of 16 minutes past 12 Eastern time of 29.34.25. Hasn't done that yet. And sideways at the peak E of the 10-minute chart. Think of this like a 120-minute chart and a daily chart. That's kind of the same difference. Maybe, yeah, about the same. So, okay, let's go back, and we want to look at the euro. Euro's had a leg 8 to the upside. So far, it hasn't, it's trying to close above the 14-period moving average. The MACD is just crossed positive, and the stochastic's gone from the teens to the 31% level in 4 sessions. That's pretty good. But it's that weekly chart that is showing no strength whatsoever, 19%. It's suggesting from the percentage terms in the weekly chart and the 6% in the monthly chart is really suggesting that until the euro dollar currency pair at 1.0978, up just to 0.01, can start to trade in the 1.167 area. Really, I mean trade. It can't just go there once. It has to trade there. That monthly chart, or the weekly charts, need a lot to improve and to close above the black 14-period moving average right here at 1.108, and for that monthly to improve a lot. And that's going to take a great deal. It's going to mean that the dollar index, let's see, dollar index trading at 98.89, down a penny. It would really need to trade underneath 97.75. It has to go right back to the whole consolidation from in August. And so far it's holding very well. Okay, crude oil, just real quickly. Crude oil, I don't see all that much to talk about in crude oil, except that it's breaking down. It's at the bottom end of this rectangle formation, very long rectangle formation. Actually, I should even make that narrower, just so that you can see it better. There's the rectangle formation. It's trading at 52.38, down 7 cents. Just had steady lower highs, lower lows, lower highs, lower lows, just day after day after day. Now it's trying to, with the stochastic at 7%, it's trying to form some kind of a trading base. 50.52 was the previous low from way back, I think August the 1st-ish area. And the most recent low here is yesterday's low, 50.99. So just above that previous high. So watching this closely, I think now the 54 is very strong resistance. Crude oil, we did a TLT, very important. TLT has had a move up today, up 67 cents at 145.58, defying this whole notion that money flows out of equities when they are equities are shaky and very volatile to the downside, and money flows into bonds. Today they're both up. In fact, the Dow's up sharply at 225, and the bonds are up. Let's see. Yeah, so, isn't that interesting? The Dow, let me just do this on a percentage term. Yeah, the Dow's up 0.87, and the TLT is up 0.87%. And the S&P, the TLT is up 0.46%. So they're all moving in the same direction, not the same proportion. All right, next thing we want to look at is within the context of the weekly chart of the TLT, I drew the arch formation. Now what we'll see is if there's going to be a big rally next week, maybe the bonds don't need to rally much more. They can come back and test the 143.56 area, 9-period moving average. That's 2 points lower than where we are right now, and that'll create an H pattern. But I tell you something, if the bonds start to move into the 147.20 area, I don't see how the market's going to handle that all that well. So, okay, that's that. I think I've covered a chunk on what I want you to do. Another couple of questions. Please look at the IYT. Let me just refresh this to see. Oh, there's a question as well. Okay. Hi, Basil. Do you see CGC going lower? Okay, so I'm not sure who that was. Okay, so yeah, I see CGCs. The IYT is bouncing. 174.26 was the low of the 28th of August. Yesterday's low was 1 74.45, 20 cents. I'm 20 cents above. Now it's trying to take off to the upside. I think that the magnet of 173 area, it doesn't have to be 174 is good enough, but the whole area of coming back towards making lower lows towards the 200 period moving average suggests that if at any point in the next 4 to 8 sessions, the IYT, the transport index, goes below 173 support underneath the 200 period moving average for the first time, we have to take note of that. Okay, and on the upside, it'll be great if by Friday, this time next week, if the down this time next week is at 26,800 or higher, I would say that's really good action. If the IYT, the transports, are up, let's just say, yeah, the IYT trading at 179.42. If it's anywhere near 184.50, that'll be very good action. So that's what I'd be looking at on the upside. So let me just look at CGC, trying to rally here. 23.20 down 18 cents. What I am going to say is that this is the first time ever since we were long a couple of times, a little profit, a little bit of loss. I didn't want to be there at all anymore when it was up in the 30s of the MJ, which is the, MJ is the alternative harvest. This is the cannabis ETF. And then it plummeted down to the 19.36. I would say that that is a pretty hefty decline. But all of them are starting to show some sign of at least recognizing that the selling is thinning out. Now is where I'd like to look, because the on-balance volume has given me a low bar together with the low that was made in CGC. This is called Canopy Growth Medical Marijuana, trading 23.18 down 20 cents. 3 days ago, it hit 20.52. And I just wanted to check. Oh, I didn't mean to do that. I guess this mouse is a little active. I better unactivate it. Yes, so the volume, 8.1 million, 55555. So to me, in a sense, that was a little bit of a climactic low. Volume expanded disproportionate to its normal trading range, and the price came down to the lowest low, and it went underneath the 200 period moving average. This is what I'm going to say. I'm not sure the name of the person on CGC. Start your engines. Just get a position right now at 23.21, and I'll talk about all the rest of it when we get back. That was up 238. Very nice.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and what we're looking at here is CGC, which is canopy growth. I'm going to make a suggestion. When you've come down this far from the 50s, 52 area, and you hit the low in the 20 area, I'm just going to say you got to be careful that you don't get too carried away. I would just have a process involved here. The last rally went quite nicely from the 23 to the 28, 29 area. This is the one that has to have legs. In other words, you can't see this as a move that is going to go up and then kind of stall in the sense that it goes up and then, what I mean by stall is to come back down and do a retest. This is the move that has to go up, and then you want it to hold very nicely. In other words, at 23.18, not good enough. I need to see that the 14-period moving average of 24.18 hit with the next ready by Tuesday or Wednesday, and that'll raise the base. And it'll say, if you just get in right now, 23.18 the starter position. 22 is where 22. You've got to have a bit of. You've got to have at least, I think, a point stop initially, just to give it some room to breathe and wiggle around. But you want to see 24.18. Once it gets there, it says, okay. Now you want to see the MACD at least attempt to go positive. And it's not right now in the daily. You want to see the stochastic, not in the daily, which is at 18%, and can go quite simply go to 21% with a little bit of a rally. You want to see by Friday a week, the stochastic in the weekly chart move up to the 18, from 14% to the 18, preferably even 20% as it moves into the 28s and holds there. Once it holds there, it's going to improve the look-back period. So it's a starter position. But having beaten down like this, it says there's a real good chance you're going to make another arch formation and then a retest. So I'd prefer that you're in now, 23.18. Hopefully it rallies. It's up from the low of the day. The low of today, 23.75. Sorry, the low of the day is 22.75. So it's up about 30 cents from the low. You want to see it moving very nicely so that the 200-period moving average in the weekly becomes a support level, and you make higher highs and higher lows. So it's a starter position. There's no other way to do it when you've had such a powerful move. 59 was the all-time high in October of 2018, slumped down to the 24s, ran up to the 52 area, comes back down, as I say, to 20, and now it's at 23.18. This is the only way you can do it, because it's either that or there has to be a trigger that is the whole group gets triggered for a really good buy signal based on not a report, a broker's report. It must be on a, I would prefer it's on a technicality that something's been passed or something's not there's a legality that was really a negative, and that now that it's been lifted or is now newly implemented has become a trigger for the area to move higher. So it's just a starter position. So that's 23.17. And that's the way I would do it. Next thing I've got here is a bunch. Let me just see if I can get to them. Yeah, so as I was doing that, I was going to do something else, and I said I'd finish. Oh, yes, I remember what I wanted to do. I wanted to do this within the context of the grains. Look, wheat is holding very nicely. It got hit peak E in the ChapmanWave methodology. What does that mean? In the ChapmanWave methodology, we go from the lowest, most identifiable low. We try to count each successively higher peak. We grade them, alphabetize them in sequence, A, B, C, D. At peak D, the fourth highest peak, other things can happen. It can go to E, F, and G, but D is where other things can happen. Saw that 3 times now in the Dow daily chart. They gave fabulous sell signals at the top at a peak D. I love to look at straight line moves. That's one, up and down. I like to look at the arch. I make it red because if it takes out the left side low, it's a problem. And I like to look at the cup. I like to make it green because if it goes above it, you can see another push higher, just like these are V's, but they're actually really arches and cups. So you can get a combination of 1 and 2. That's a straight line down and a bounce that's red, because if it takes out the left side low, that's very negative. Look at on the left side, a little bit of wheat that you can see. Look at these arch formations that made lower lows. And on the other side, you've got the cup formation, sharp move up and a cup. I call this ChapmanWave drop bucket pattern, double top, because if it fails, it can go all the way back to the low of the trough of the cup, or even lower 1-to-1 to the downside. But if it breaks to the upside, you can keep going higher, just like it did here. So let's move this away and see what's the relationship of ChapmanWave methodology and techniques to the W. And that means you've gone to a D. That's where other things can happen. This is the longest and sharpest move you've had down. Then it ran a single leg up to a D. And that's not a down arrow yet. It's still a D because that magnet of the 499 and a half 200-period moving average is still trying to draw it, and the 9 and 14-period moving average are support. So wheat is trading at 489 and a half, up 3/4 right now. The MACD is not. The MACD is holding very nicely. The stochastic's weak at 64%, and the weekly chart says, you know, it could still chop around in a trading band. Let's look at corn. Let's look at soybeans trading in leg C, peak C to the upside. Very nice move. I like this a lot. MACD is strong. Stochastics at 89% strong. It should go to a D above the high that was made in the continuous contract of the 1st of October at 920, round number. And the weekly chart's having inside reverse cup formation. So this is very important because it's very strong, and it suggests that there's going to be a move into the, at 918 right now, there's going to be a move into the 922 to 928 area next week. Just the way it looks right now, because everything's starting to improve. Monthly chart looks terrible. And corn, which is corn is trading at peak C as well. Not as good a chart, but still okay, improving a lot from the low it was made. It's down 4 at 384. I suggest to you that there should be a move above peak C of 392 and 6/8. There should be a move to go to a leg D at some point, maybe next week. So that, I just wanted to do that. I want you to show you high-grade copper. High-grade copper right now, it's just in the lower range. It's not doing anything great. And now, if there are any questions in the den, just fire them away. In the meantime, back at the ranch, XLI is the one that's, I think, is a legitimate industrial ETF than the Dow, which is the Dow 30. I really call it, it's really just the Dow 30. It has nothing to do with industrials. It has maybe in a Caterpillar. You know, it is not doing the industrial scene much at all. So, okay, trading, this is trading at 75.36, up 52. Not such a bad pattern. And in fact, this ChapmanWave oval pattern, stork leg formation, over the weekend, I'm going to do a little bit more work to see if this wasn't the oval here, that was the neck, and this is the beak, and that there could be a big rally after that. No, I'm just going to go one step at a time and say it's held very nicely. 76s, the whole 76 area is tremendous resistance. If at any point, any day at 75.35, if any day closes under 74, 47-ish. I think it's going to be retesting the lows that were made yesterday. So that's the XLI question. Whoa, a break coming up. All right, we'll do the wrap in a moment. This is the final break. The Dow's up 239. Hey, let's just see. Is that still in the rectangle formation? Yep, it's still. Isn't that amazing? Look at the whole hour. We've been stuck in the tiniest trading range after such a big move from yesterday's low. That is incredible. Yesterday's low to now. It's amazing. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Everyone, don't forget, you got Steve Rhodes coming up. You got Dave White coming up, and Tom O'Brien wraps it up. I hope you all have a wonderful weekend. I hope to see you on Monday. I believe I'll be doing my show early in the morning to be pre-recorded. So there are a couple of things I want to look at here just as we're about to wrap up. Look at this. We're still in the trading band, very tight between 2935 and 2938-ish. In the E-mini, isn't that amazing? Now, the rule of thumb says a long rectangle very often can finally break to the upside and then go sharply below the trading range, and that becomes a resistance to be monitored. So let's see what happens here. So in other words, a pop to the upside shouldn't last, and based on this is a 2-minute chart. Remember, this is not the daily or anything. This is a 2-minute chart. Should be a pop-up towards the 29, 39, maybe 40 area, and then a pullback underneath 2934, and how that tries to get back is going to be important because now it becomes a really heavy ceiling of resistance. All right, enough of that. Let's get to the nitty-gritties. Very nice move in the Vix Index. If the Vix Index closes on a weekly basis, closes here, you've got yourself another long wick. That's the shadow. with the price closing on a Friday below, but still way above the 9-period moving average, way above the 15.28 200-period moving average, and that suggests there is still a lot of hesitancy, nervousness in the market. If the Vix Index trades at Friday today at the close below 17.40, it says, hey, maybe Sunday there's a pop to the upside, Monday there's a good action. But I would just suggest you be careful, because if we go back above 18.28, 1850 at the close, that candle is going to look a little bit like people were still buying insurance because there's so much uncertainty here. So that's kind of what I'm looking at here. We still remain short two positions. The key indice is the Dow and the sector indice, but we're also long a sector. And we're also long a stock, and both of them right at this moment are now up from where we bought them. But these are moves that were 30% to the downside. I don't expect this to be a quick move. I would like that it stabilizes, and if the market pulls back next week, these things hold steady. Then they are free to move to the upside. It's a process. That's what I'm thinking. So have a wonderful day, have a wonderful week, and stay tuned for Steve. And check out my opening call. You'll see that's a very articulate newsletter, and we have some very nice positions.